What's going on, everybody? All right, so let me show you guys when I'm talking about supply and demand sometimes, what does this actually mean? And it's nothing too fancy, right? It's just basic laws of supply and demand and how the chart can tell you where there were once buyers and potentially where there might be buyers again, or where there was once sellers and then potentially where there could be sellers again. And I'm just going to open up one of the time frames I've been looking at is the 15-minute time frame. And you can see a lot of patterns here, right? You can see head and shoulder patterns. I mean, if you guys are familiar with it, you see the shoulder line, you can see it up here. I mean, if I were to draw a trend line, you could probably see it. But I'm also looking at a supply and demand levels down here. If I turn to the 1-hour chart, I drew supply and demand levels based on this 1-hour chart, and I'm going to show you why. So what happens is supply and demand are basically how at least I have been trained on it and how I view it. It's one of the many indicators that I use. It's more pure price action and support and resistance lines or zones. That it's one of the many things that I use to help me determine trend in a market or help me determine where a turn might happen or a reaction might happen in the market. And so, and let me show you just on the 15-minute time frame. Now, in equities, I use time frames that are even much lower than this. I use 1-minute time frames, 5-minute, 20-minute, 2-hour, and daily and weekly. Mostly, those are the most time frames. I might switch between others, but mostly 1, 5, 20, 2-hour, daily, weekly. But let's see here on, if you notice here, price comes up off of this level, and you see that it moons here for a second, not really moons, but it actually goes up pretty quickly. And then it pulls back here just for a second, and it looks like the sellers, it has a red candle here, a 15-minute red candle, so a bunch of sellers selling, right? But then out of this level, it explodes, right? And so what this means is that the buyers won out in this battle. There was a battle here. You had some sellers coming in selling, and then it pushed and it made a reaction that was obvious. You had a 15-minute candle that came in here and just exploded out of this position, right? And then you notice how it consolidates, goes up, and then it's starting to come back down. Now you notice here that price had just come back down and it tested this level. Let me show you. I'm going to, sorry, let me go here. We'll just draw a horizontal line. Where the price opened here, if you look up here in the top left corner, when I hover over this red candle on the 15-minute, it opened at, you see the 81.84. But I'm just going to draw a line right here where it opened, 81.84. That's about where it opened, right? And this means that there were potentially still buy orders sitting here. It's a zone, right? And the zone that I would draw was down to this level where it started on the 1-hour. So this is a 15-minute demand level. This is a 1-hour demand level, right? So there are a couple demand levels where potential buyers might be here, where it doesn't mean that this won't chew through it because it, if it's in a downtrend and if the sentiment is bearish, it'll chew through all these potential buy orders. But most likely there's still buy orders left here. And you notice the reaction came down right here. If you notice the low here, 81.86. So it came right down here and almost, for all intents and purposes, that's where the buy orders are sitting started. Price comes down here and reacts, touches this level, right, this demand zone, and then starts to have a slight reaction back upwards. Now, not a big reaction, but still, it's a lower time frame. The demand zone is there. So you can start to use these demand zones or supply zones when there's a sell zone. You notice up here, probably if I were to go to the 1-hour, let me see here real quick. 1-hour demand zone would be probably 4-hour. Let me go here. I'm just looking to see here where a demand zone here would be where there was a consolidation period of buyers and sellers. There was kind of like a little battle, and then boom, right out of here. Look at this reaction. So where price came back up and it tested was in this consolidation area where there was a big reaction from this candle, at almost perfect supply zone. So meaning there's a lot of sellers there, still probably with their orders left over. So I say this because if you see some stuff on my charts, this is how I'm looking at it. I'm not suggesting that you guys follow this, but if you're wondering, if I'm posting charts, I will sometimes look at these demand zones and supply zones as reactions, in particular for me to take profits in equities. I don't usually use them on my charts and have them sitting there in equities. I have a different kind of strategy. But I am almost at a subconscious level now because I've been using these levels for so many years that I do take profits at these levels, at least partial profits. And it might be something that you might come to do as well. You might say like, hey, I don't want to base my sole trading off of supply demand or support and resistance or whatever it is, but it's an indicator to say, hey, you know what? There might be a reaction here opposite to where I'm trending or where my bias is. So it's important to take a little piece off, whether it's a third, a fourth, a fifth, even half, or whatever it is. You're like, depending on what you want to do, you may say, I'm going to take a partial position off here. Now, some people may say, like, that's an advanced strategy. As you start to like trade more and more, you'll probably want to take partial profits on your position and not go, like, for example, I rarely go all in on a position at one time. I typically leave a little, I test the waters a bit when I enter a position, and I add to my position as I go on. And then I also take partial profits on a position, and I continue to take profits at different levels based on what I see in the chart. But so to me, like, the question is, why did we have a reaction here and it started to go back up? It's just basic laws of supply and demand in the market. That's what moves the market, right? There were more buyers here at the present time when it came down and touched this level than there were sellers. So we had a little slight reaction. Now, if it chews through this level, it has a whole nother hour demand level to get through as well. So we'll have a reaction in this zone, potentially. If it breaks the zone, in my opinion, I'm looking at, because you can also see here in the 15-minute chart, what does this look like? An inverse head and shoulders pattern, right? So if an inverse head and shoulders pattern should continue to go bullish. If it chews through this head and shoulders pattern, which is an inverse pattern, that means to me this is going to be a bearish pattern. And like Jen has been saying, the 7,700 level is an important level. I have it here written at 7,800 and then down to 7,500, but that zone, essentially, this is where my support and resistance lines are drawn. But if I go into the micro level, so I could scroll out here even on the 15-minute chart, and I can see, like, to me, this is like, once we break 7,400 or thereabouts, like, I'm looking at a pretty significant drop down to 5,800 or where we were before, right? There's a big layer here for us to go down, but before I get there, I'm looking at this area as an important area. So hope that helps you guys. Talk to you later. Take care.